So what are the things that will come under other expenses? One is the director's fees, 2000, carriage inwards, 2500, office expenses, 16,000, insurance, 600, but insurance has been paid for a period of 1 year up to next June. We have the discount on debentures. Half of it has to be written off. So half of discount on debentures will be 750 rupees. I have to write it off. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to the session. In this session 2 of Unit 5, I'll be working out a few problems on financial statement of companies. Now, let us see what is the first problem here. Problem 1. From the following particulars of a company, prepare profit and loss statement for the year ended 31st March 2022. So, first thing they have given is revenue from operations. Now, what does this mean? Revenue from operation means the sales value. So, whatever is the sales value given in the problem, that we will consider as revenue from operations. Then cost of materials. So, cost of materials is given as 1,30,000. Then employee benefit expenses 90,000. Finance cost 40,000. Other income 30,000. Depreciation and amortization expenses 20,000. Other expenses 20,000. Provision for tax to be made at 50%. So, now we have the format here. So, do we know what is the name of the company? They have not given any name of the company. So, we just don't write any name of the company. But then, the profit and loss account for the year ended 31st March 2022. So, this is the profit and loss account for the year ended 31st March 2022. Now, first thing is revenue from operations. Now, this becomes very, very important. Note number. So, this will be the notes attached to the profit and loss account. So, note number 22. So, I have revenue from operations is nothing but the sales value. So, I write the amount as 4 lakhs. Next, other income. So, we have other income. What is the other income? 30,000. So, I write it as 30,000. So, total revenue will be 4 lakhs plus 30,000. 4 lakhs 30,000. Next, expenses. Cost of materials consumed. Have they given cost of material consumed? Yes. What is the cost of material consumed? It is given as 1,30,000. So, I just put the amount here. 1,30,000. Then, purchases of stock in trade. Do we have purchases here? No. We don't have any purchases. Then, next, what do we have? Change in inventories of finished goods. So, this is not there. This is also not there. Then, next is, have they given us the stock of materials? No, it is not there. Then, the next one given is employee benefit expenses. So, employee benefit expenses, it is here. So, what is the employee benefit expense? 90,000. So, I write it as 90,000 under the heading employee benefit expenses 90,000. Then, next they have given us the finance cost. Finance cost is 40,000. So, I write the finance cost as 40,000. Then next we have depreciation and amortization expenses 20,000, other expenses 20,000. So depreciation and amortization expenses 20,000, other expenses 20,000. So altogether we have to just add up all this. So we will get the expenses, total expenses. See, when we add all this, we get the total expenses as 3 lakhs. So from 4,30,000, I am deducting 3 lakhs. I get the profit as 1,30,000. Now from this 1,30,000, I have to deduct the provision for tax to be made at 50%. So there is a 50% provision for tax to be made. So I take less tax provision, 50%. So 50% of the profit will go as tax. So 50% of 1,30,000 will be 65,000. So the rest of the amount, 65,000, this will be the profit after tax. Or this is the profit which is available for the shareholders. So whenever we are given problems like this, first thing is we have to write down the format of the profit and loss account. So we also have to remember the schedules. So revenue from operations is schedule 22, other income is schedule 23. Then cost of materials 24, purchase of stock in trade 25. Then work in progress 26, employee benefit expenses 27, finance cost 28, depreciation 29, other expenses 30. So if you remember all this, we will be able to do the profit and loss account easily. Next step will be you have to deduct from the other income, you have to deduct the expenses. So we get 1,30,000 less tax provision 65,000. So profit after tax is 65,000. So this is the profit which is available for the shareholders. So we'll go to the next problem. The following is a trial balance of Antony Limited as on 31st March 2022. So they have given us the debit balances and the credit balances. So let us see what are the debit balances here. So in the debit balances, we have machinery, interim dividend, debtors, investment. So all these, this machinery, debtors and investments, they are all assets. So they will go to the balance sheet. Then we have the depreciation on machinery and building. So the depreciation on machinery and building, it will go for the profit and loss account. Then next one will be wages and salaries. So they will come under the heading employee benefit expenses. Then we have the bad debts, the director's fees, this will come as an expenditure. Now under the credit balances, we have paid up capital 1 lakh, unclaimed dividend 200, debenture redemption fund 25,000, sales value is 1,24,000. This is nothing but revenue from operations. Revenue from operations is 1,24,000, bills payable 1,000, interest on debenture redemption fund. So we have this 800 rupees, general reserve 5,000. Next, debenture interest. This is 900. This is up to 39/20/21. So 6 months interest is pending. So that we have to add to this debenture interest. Then insurance is an expenditure which will go to the profit and loss account. Then cash at bank, it goes to the balance sheet. Then buildings. So buildings, office expenses again P&L account. Carriage inwards, so P&L account. Discount on debentures, P&L account. Then purchases again P&L account. Goodwill, this is a asset. Opening stock again P&L account. Now this one, debentures, so 30,000. Reserve for bad debts, it is also a P&L account. So profit and loss account balance, this is of last year. Transfer fees, this comes under the heading other income. Then creditors, this is a liability. Then Next one, we have the adjustments here. Maintain 6% reserve for doubtful debts. So for doubtful debts, we have to maintain 6% reserve. Rupees 300 insurance paid for 1 year up to 36/20/22. So this is extra 3 months insurance has been paid. Extra insurance paid. So that is, it is paid in advance. So this will come under the balance sheet, and we also have to make an adjustment in the P&L account. Then closing stock is 25,000 and it includes goods worth rupees 4,000 received on the last day, not entered in the purchases book. So this 4,000, it has to be added to the purchase value. So purchase value, we have to add the 4,000. Then transfer 2,000 to debenture redemption fund. Okay, write 1/2 of discount on debentures. So discount given on debentures is a loss which has to be, it is a deferred expenditure which has to be written off. Then provide for income tax at 5,000. Final proposed dividend is 10%. Provide for corporate dividend tax at 15%. Then prepare final accounts of the company in the vertical form. So we are given the problem here. So we have to analyze the problem. So how do we analyze the problem here? So we have to just identify under what schedules each of these items are going for. So when we just identify the schedules, then it will be easy for us to work out the problem. So first thing is, we will just have a look into the pro forma of the balance sheet. So the name of the company is Antony Limited. Antony Limited. Balance sheet as on 31st March 2022. So equities and liabilities, we have the shareholders funds. Under this, the share capital, reserves and surplus. Then reserves and surplus, we have the profits of the last year and this year we have to write. Money received against share warrants, share application money pending allotment. Then next we have the long-term non-current liabilities. In this, the long-term borrowings we have deferred tax liabilities, other long-term liabilities, long-term provisions. Under current liabilities, we have short-term borrowings. So make a note of the schedules here. Trade payables, Schedule 8. Other current liabilities, Schedule 9. Short-term provisions, Schedule 10. Then next will be the assets. Now we have to make a list of the assets which are there. So first thing is the non-current assets. They all come under Schedule 11. Then non-current investment, Schedule 12. Deferred tax assets, 13. Long-term loans and advances, 14. Other non-current assets, 15. Then we have current investment, 16. Inventory, 17. Trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. So we come to the end of the total of the assets column. Now, next we have the profit and loss account. So profit and loss account, the name of the company is again Antony Limited, Anthony, Antony Limited. So this is 31/3/2022. So we have the first item as revenue from operations. So the revenue from operations, it comes under Schedule 22. So what is the revenue from operations? We have to see the problem here. So what is the problem given? So what have they given as revenue from operations, or the sales value, whatever is given, that is the revenue from operations. So we write it as 1,24,000. So revenue from operations is 1,24,000. Then other income. So I'll write the note here. So for the first one, revenue from operations. So it is nothing but the sales value which you have to write. Now the sales value is given as 1,24,000. So I write 1,24,000. Other income. So what is that other income here? Other income is the transfer fees. So transfer fees is given as 100 rupees. So I write it as 100. So this is nothing but the transfer fees. So 100 rupees only. So the total income will be 1,24,100. So this is the answer. So revenue from operations 1,24,000, other income 100. So total revenue is 1,24,000. Next one. So expenses. Now the cost of materials consumed. We have to see what is the cost of materials consumed given in the problem. So we have here cost of materials consumed, but there is no amount relating to it. So it is nil. The next item is purchases of stock in trade. Now what is the purchase value given? Purchase value is given as 64,000. I'll write it here. So purchase value given in the problem is 64,400. Now in the adjustments it is told that 4,000 has not been entered. So I add that and write it as 68,400. Purchases of stock in trade is 68,400. The next is change in inventories of finished goods. So for the change in inventories, opening stock minus closing stock. Now what is the opening stock here? Opening stock is 12,500. Closing stock is 25,000. So the difference amount is 12,500. I write it here minus 12,500. Then next we have work in progress and stock in trade. So this is not given here. So work in progress and stock in trade is not given. Employee benefit expenses. Now for the schedules at 27, so we have the employee benefit expenses. So what are they? Salaries and wages. So salaries and wages we add together and write it here. So what is the salaries here? Salaries is 9,400. This is 9,400 plus 8,000. So this is 17,400. So this employee benefit expenses is 17,400. Next one is the finance cost. So under finance cost, we have to write the debenture interest. Now what is the debenture interest given? Debenture interest is given as 900 for 6 months. So I add again 900 for the next 6 months. So the total interest will be 1,800. So the finance cost is equal to 1,800. Then next one is depreciation and amortization expenses. Now in this we have the depreciation for buildings. So depreciation on machinery, depreciation on building. Then next one, we have the discount on debentures. Half of it has to be written off. So half of discount on debentures will be 750 rupees. I have to write it off. So here I will write it off here. I will write amortization expenses. I will write here. Depreciation on machinery is 4,000. Building is 1,600. Discount on debentures 750. So this will be 4,000 plus 1,600 plus 750. So total it will come up to 6,350. 6,350 rupees. Then under the heading Other Expenses. So for the heading Other Expenses, I have written the calculations in this slide here. So what are the things that will come under other expenses? One is the director's fees, 2000, carriage inwards, 2500, office expenses, 16,000, insurance, 600, but insurance has been paid for a period of 1 year up to next June. So for 3 months, so we have whatever extra we have paid, I have deducted. Then bad debts is 700, it is given as bad debts. So we have the new RBD at reserve for bad debts at 1500. So for the bad debts, add the new RBD, we get one amount. From that you deduct the old reserve for bad debts. So we get a balance of minus 300. Now when we add all this, I get the amount as 20,725. Now this 20,725, I will write it under the heading 20,725. It will be written as under other expenses. So when I add all this, I get the amount as 1,02,175. The total expenses, so 68,400 minus 12,500 plus 17,400. So when I add all this, I get the amount as 1,02,175. Then, so next will be profit or loss. So when I deduct the from 1,24,100, I am deducting 1,02,175. So 1,24,100 is the revenue. 1,02,175 I will deduct. So what is the amount I will get? I will get the profit as 21,925 rupees. 21,925. So this is the profit or loss. Now from this we have to deduct the provision for tax less deferred tax. Deferred tax is given. So 5,000 I am deducting the deferred tax. So profit from operations. So this will be equal to 16,925 rupees. So this is the profit which is available for the shareholders. So here we have to calculate in this, we have to calculate the profit and loss account in this manner. Now the next thing we will have to complete the balance sheet here. So for the balance sheet we have the share capital. So what is the share capital given here? Share capital is given as, what is the share capital given? Share capital is given as 1 lakh. So I write the share capital as 1 lakh. Then under the heading reserves and surplus. So for the reserves and surplus, I have the general reserve. So I write here. So for the B section, reserves and surplus, I have the general reserve. So general reserve is 5,000. I have to add it. Then we have the debenture redemption fund. So the debenture redemption fund is balance is 25,000. Add current year's transfer. So this year we are transferring 2,000. Then add interest on DRF. So interest on DRF is 800. Totally it comes to 27,800. So when you add 27,800 plus 5,000, I get 32,800. So I write here under the heading reserves and surplus 32,800 is there, plus What is the surplus? So P&L account, last year's profit and loss account balance is given. It is 11,500 plus this year's profit 16,925. Totally when we add 28,425 plus 32,800. So the total amount. Now for the heading reserves and surplus, first thing is I have to write the general reserve. General reserve is 5,000. Debenture redemption fund is 25,000. So the transfer to the fund is 2,000 of this year. So whatever interest we have received, that will go to the debenture redemption fund investment account 800. So totally 27,800 plus 5,000, 32,800. Then we had given the profit and loss account of last year. For that you add this year's profit. So we get 28,425. You add this surplus here. So the total will come up to 5, 2, 8 plus 4, 12, 11, borrow 1. 61,225. From the 61,225, I will have to transfer to the debenture redemption fund. 61,225 minus DRF. So DRF I have transferred 2,000. So I get 59,225. Again, from this I deduct the interim dividend paid. So interim dividend paid is 5,000. I deduct. Interim dividend paid is 5,000. So it will be 54,225. Then final dividend proposed is 10,000. That will be 44,225 less corporate dividend tax 2,250. So I get the answer as 41,975. So when I write here reserves and surplus, I write it as 41,975. 41,975. Next, money received against share warrants nil. Then we don't have share application money pending allotment. So when we are writing the balance sheet of the company, first thing is you write the name of the company, Antony Limited. Then the balance sheet as on 31/3/2022. The share capital is given in the problem as 1 lakh. Now under the heading reserves and surplus, we first write the general reserve 5,000, DRF 25,000, current year's transfer 2,000, interest on debenture redemption. So when we are writing the balance sheet of the company, first thing is you write the name of the company, Antony Limited. Then the balance sheet as on 31/3/2022. The share capital is given in the problem as 1 lakh. Now under the heading reserves and surplus, we first write the general reserve 5,000, DRF 25,000, current year's transfer 2,000, interest on debenture redemption investment 800. So when we add all this, we get 32,800. So last year's profit and loss account is 11,500. This year's is 16,925. When we add all this, we get 28,425 plus this 32,000. Totally I get 61,225. From the 61,225, I am deducting the debenture redemption fund 2,000. Then this is the deferred tax liability 5,000. Then interim dividend. Then the tax liability. So I get 41,975. So in the next sheet, we have the long-term borrowings. So the long-term borrowings means the debentures. So debentures 30,000 plus 900. 30,900. So we don't have anything here. The next step will be the trade payables. So for the trade payables, I have 26,000 as the debt, the creditors and 1,000 as the bill payable. Totally it is 27,000. Under short-term provisions, I have the 5,000 and tax provisions for 2,250. Totally 7,250. When I add the liability side, I get 2,17,325. Now going for the asset side, I have the assets here 30,000, 80,000 and 30,000. So building, machinery and goodwill. All together it comes up to 1,40,000. So all other things we don't write. Under the non-current investments, it is 25,000 given in the problem. Then next we have the inventories. The closing stock is 25,000. Other trade receivables, that is sundry debtors of 25,000, trade receivables 1,500, totally 26,500. Then cash at bank is 3,000. Other current assets is this 75 rupees of the insurance advance paid, and then 750 is the discount on debentures. So totally 825. So the total of the credit asset side is 2,17,325. So in this way we have just prepared the balance sheet and the profit and loss account. So first thing is you write the format of the balance sheet, write the format of the profit and loss account, then you write all the notes and then transfer the items to the profit and loss account, calculate the profit, and once you get the profit, then you transfer to the balance sheet. So next we have this profit or loss at 16,925. So whatever notes I have written, so it should be mentioned in as per the schedule, schedule 1, schedule 2, schedule 3. So in this way we have to prepare the profit and loss account and the balance sheet. So these are the two problems which we have discussed. Hope you have all followed it. Thank you.